three arguments. Firstly, on access to banks. Secondly, on the health of the banking sector overall. And thirdly, on why centralised bodies will be subject to political control. Before that, three pieces of setup. Firstly, we kind of agree with open government about what the banking requirements in Islamic banking are, but I know it's primarily at things like the prohibition on usury. But I would note that most of what happens in terms of Islamic banking is that they devise elaborate ways to get around these prohibitions so that they're able to still adopt financial instruments that are similar to those used by Western financial institutions, but in different ways that aren't compliant with Sharia law. So it looks like things like issuing complicated annuities instead of giving ordinary loans. It looks like things having rent-to-buy schemes for houses instead of having a mortgage, where you live in a house for a period of time and pay a higher rent instead of like an interest payment. Or it looks like things like calling interest payments on debt indexation or to adjust inflation instead of interest. Secondly, I would note that normal banking regulations still exist symmetrically. So there is still a central bank that is non-Sharia under each side, which is able to do things like impose capital requirements, impose risk-weighted asset requirements, impose liquidity requirements on banks. That is symmetric out of the bank. So we think the risk of banks with regard to ordinary financial means is somewhat symmetric. But then, and I know specifically responding to OG, there are also different boards within the banks. So it's not that like the board of directors in your bank, you don't have to trade off financial competence against Sharia competence, because you can hire people with both, or you can have a different organisation within the bank whose main job is to look at Sharia compliance. Before I move on, I'll take a point. Okay, first argument then on access to banks. Yeah, sure.
You guys give the mech why these banks wouldn't want to comply to their own regulations at a very high level when you say that they skirt to get around Sharia law. Surely that means risk is high.
No, it's not about skirting to get around Sharia law. It's about there are a set of banking processes and instruments that you still want to develop under either side because they're good, they give people credit, they help the economy. The goal of Sharia compliance is to make them comply with Sharia law so people can access them in good faith. Firstly, on access, why do people? The first thing I'll notice is people care obviously about Sharia law deeply. They don't want to get they don't want to do their banking at a non-compliant bank. They often believe in it very deeply themselves. They believe that eternal punishment will come to them if they do it wrong. But obviously there is also a very strong community incentive. So you don't want to be judged for engaging in a bank that isn't complying properly. 5 reasons why access to banks is better under our side then. Firstly, people who follow different sects of Islam to the central government are much less able to access banking under their side. This looks like Shias in Syria or Kurds and Sunnis in Iraq, etc. And it's conceded by opening government that there isn't consensus in terms of Sharia law when they talk about there being different texts and being different ambiguities. That is a significant group of the population who deeply mistrust the central government, who believe in a different strand of Islam to them, and who are now going to banks which are just, they have no faith that they will comply with their particular version of Islam. That is a significant population of the proportion of the population, for example, in Iraq. Secondly, many people exterior to that just have mistrust of the central government. We think it is bad to tie people's trust in the compliance with their bank of Sharia law to their trust in the religious authority of the central government. So what that means is, in times of crises of confidence in the central government or the religious authority of the central government, for instance when there are tensions, for instance when there are unrelated corruption scandals in the central government, or for instance when, like the theologians in the central government are correcting Sharia law themselves, now people no longer have faith that the bank they are going to is properly certified. Thirdly, there are a number of local customs, even if people follow the same sect of Islam, which banks individually will adapt to, which the central government can't. For example, in many parts of Indonesia, they hybridize Hindu and Islamic traditions, and we think that individual banking boards are much more able to do that and adapt as such and make people feel comfortable in that way, compared to having a blanket policy under their side. Fourthly, people, regardless of whether or not they're actually better at complying, perceive that the local board is better at enforcing its regulations because they perceive that they're more connected to the bank, they perceive that they can directly look at the balance sheets, they can directly look at the instruments and the issues that the bank is doing. The central government is not seen as able to do that, they're seen as more overburdened, they have thousands of banks to regulate. Fifthly, there's more cooperation with local leaders who are the ones certifying these banks. So we think local Islamic leaders essentially act as the Sharia equivalent of credit rating agencies, where banks go to them and they say, can you please check over my books and make sure we're Sharia compliant? Then the local imam or the local ayatollah, who has an incentive to do this correctly because they care about their religious reputation and maintaining their credibility, then certifies that the bank is Sharia compliant. And people trust those people. So we don't need to have the banks doing it themselves. We have essentially Sharia credit rating agencies. What is the impact of this argument? Firstly, underside government, an enormous amount of people simply don't access banks. They do not get the benefit of credit, which means they're able to buy cars that they need to go to work. They aren't able to buy houses that they can live in. They aren't able to alleviate themselves by poverty by accessing the time value of money. Secondly, if people do want to access these benefits, they have to go to shadow banks under their side, which don't exist and are regulated by the central government. That means that these are people who will break their knees when they can't pay the money back. That means they also have more nerve about whether or not there is Sharia compliance at all, which is deeply anxious to them. And thirdly, I would note, less people are accessing banks, as opening government correctly note, is really bad for these banks, because it means they have less capital. It means they're more risky. The shadow banks also obviously aren't subject to the normal financial regulations which exist symmetrically, which means they're way more risky. They're more likely to run out of money and not be able to pay people back when they want to withdraw their money. Next, on the health of the banking sector, why does it increase when we have individual banks doing this certification? And this argument operates even if the central government is acting in good faith. Firstly, it's good to have a diversity of types of banks. So, there are essentially banks in the UAE which operate as ordinary Western international financial institutions with a very low degree of adherence to Sharia law. And we think this is a deeply good thing because it is able to encourage and inject international investment into their economy, but at the same time, there are brick and mortar local banks who are heavily compliant with Sharia law and do very simple transactions, and we think it's harder to have that diversity on their side because government requires standardization to get their benefits, as explained by Prime Minister. Secondly, it's easier to have networks of Islamic banks across the world on the outside because if you have like a Shia country and a Sunni country, they have entirely different banking regulations under their side when each country has to pursue an Islamic policy. But when individual banks can choose how they do Sharia compliance, it's easier to have them cooperate with each other around the world. That makes it easier for people to go on pilgrimages where they deposit their money in one place and get it out elsewhere, but it also makes economic activity between Islamic countries much more easier to do because there is a lower transaction cost of moving between banks and there is a lower time lag. Thirdly, we think banks themselves make better decisions as to their compliance. Our no opening government are wrong about the incentives of banks. Because if you are a bank, you have a huge incentive to get your Sharia compliance right. Otherwise, people will go to a competitor. That's why they do things like go to external Sharia compliance agencies who also have an incentive to get it right. And I think that these banks, when they do it themselves, are better able to manage and balance their financial risk with their Sharia compliance. So that's to say, if they do have to, in an emergency, in order to stop the banks from going under, buy a bunch of Western-style, non-compliant corporate bonds or instruments like that, they can do it so the bank doesn't collapse. So they're able to better manage to what extent they comply with Sharia law, whereas the central government can't do this because it's a blanket policy, it's less flexible, the central government doesn't have close oversight over their balance sheets, and under their side, the bank is scared of losing their certification from the central government.
DKM whenever you're ready.
I think the main problem for that opening opposition team is that in the series of cases where banks have a stricter interpretation of of Sharia law in terms of the financial sector and the government, obviously they will operate at a line that is above the mandatory minimum that this board necessarily implies, so it's still able to co-opt a lot of those benefits. But the difference is, for the series of banks who want to take more risks than what necessarily the centralised board would prescribe, that is the series of banks that you force to de-risk on our side of the house when you raise the bar for absolutely everyone, and that is incredibly important. I'll first talk about risk, then I'm going to discuss the health of the banking sector writ large, then I'll respond to their stuff about accessing banks, and finally explain why even even if you don't believe any of that, the fact that we just reduce the bureaucracy in the banking sector is something that's particularly important. I'm going to start with risk, and I just want to note what this opposition bench necessarily has to defend. They have to defend letting banks effectively regulate themselves in this thing, which I think pretty famously has obviously gone badly. Things like the 2008 financial crisis, things like corruption is endemic in that type of sector, is a reason that you should just not cross your fingers and trust these banks and trust that they will do the right thing. But decreasing risk is the biggest impact in the debate for a range of reasons. One, because often the reason people go to Islamic banks is because they want a lower degree of risk. So therefore, we are able to de-risk the Islamic banks writ large over around the world. That is something that's incredibly important to say fulfill their role in the financial sector better. But secondly, when you have less financial risk and you take do less speculation and gambling and that type of stuff, you are less likely to engage in things like crises or to be as exposed to them, which are just really bad and disproportionately hurt the vulnerable people and minorities. That is the only opposition team wants to talk to you about. They take a long time to recover from, and these are often existential threats. And finally, I would note in the particular context where these things happen, financial crises are really damaging. There's not necessarily deposit insurance in the same way that it is in the US and Australia and that type of stuff there. It's much harder to bail those banks out. Why do we decrease risk then? Because obviously Islamic banking prohibits speculation and gambling, but obviously there is open to interpretation. There are a series of grey areas. We decrease that risk in a range of ways. One, I just think because there is because these corporate arms of the bank do want to make more profits, there is just an incentive on their side to engage in a race to the bottom and to find a scholar who is oh no, you guys are legitimate, and to endorse you. And maybe you only need one because there is that plurality of interpretations. That's incredibly harmful, and that lowers the bar that you as a bank actually have to comply in a way that's something that's particularly harmful. But secondly, I would just note that we get a lot more enforcement when the government can go in and be no, you are being insufficient. You have to be able to do that. Whereas on this side, there is no mechanism for, if you've got a religious scholar saying you're all good, even just one, you don't get your license and stuff taken away from you there. But the final thing I would just say is that the more central government control you have in terms of these sectors, the more harmonization of policies you have, the more ability the government is able to intervene in the sector in a way that's particularly that is particularly good. Okay, the next thing I will just explain here is I actually think we get more people into Islamic banking more generally, which obviously de-risks the financial sector writ large even further. Because firstly, you just give them a lot more legitimacy and you signal that the government is endorsing this type of thing. So you trust it, right? It's not like on their side of the house, you see, oh, they've got the Islamic Bank label, and then you kind of have to research specific scholars, endorse them, and try and do that type of thing there. Whereas if the government says, no, if you've got that license, that's meeting a mandatory minimum, there's a lot more trust there. But also, governments are much more likely to incentivize people to go into Islamic banking when they can control it more. That's something that's particularly important. You just get a lot more certainty from consumers there. The final thing I'll explain under risk is just why other financial regulations are insufficient at decreasing risk. And I would just note that risk is something that is incredibly bad. Even if there are some degree of regulations already, having less risk in the economy lowers the risk of crises which decimate people's lives. But often there is an underdeveloped degree of risk of regulation in these contexts because the financial sector writ large is relatively deregulated because of the US hegemony there. But often, historically, these countries have relied on the Sharia component and acted in quite good faith. They feel like they don't need to regulate the financial sector as much because they feel they will comply with Sharia law in a way that's good. Closing, POI?
Oh, yeah. If you are a Sunni Muslim in a Shia-controlled state, which bank do you go to?
I think the problem, you can still obviously go to a bank that is compliant with your version of Islam, right? Because there is a different okay, whatever has a higher bar obviously is still fine for you because you are doing even less bad things. If you just comply with a higher bar, that is something that is particularly important. This is about the sheer amount of risk and gambling that they necessarily do there. Okay, I'll now respond to this stuff about like the health of the banking sector, I just think that this is kind of a strange argument. It's like essentially an argument for never doing regulation because that like affects all banks equally. Like obviously, you know, sometimes there is like a degree that you do need to have a sort of mandatory minimum there. But I would say as well that we improve the health of the banking sector by increasing competition. Because now everyone has to engage on the same level in terms of having an even playing field if you are an Islamic bank. Whereas on their side of the house, certain banks can get away with things in a way that is particularly harmful. But I would note as well, like if they're saying, oh, you have more freedom to adjust to different conditions, often this does just look like raising the risk profile of banks, and centralized boards can obviously still move, but they do it in a way that is good for the health of the financial sector as a whole, rather than just in a way that's good for the profits of that individual bank. Okay, let's respond to their stuff on access to banks now. The first thing I would just note is that due to the Sunni-Shia split, obviously there are religious minorities in some contexts, but states tend to be relatively homogenous, like Saudi Arabia, for example, is obviously very like Sunni and that type of thing there. And I would note as well that there's incentive for these boards to take into account a variety and a plurality of perspectives. They are boards, there's not an individual to take into like making all these decisions. But often, the state prescribing what type of Islam they prefer is absolutely nothing new in these countries, in terms of the way that you have a state religion, and that's an endorsement. Government intervention in this way is not something that's particularly, you know, new, novel, or important. But I would note as well, like this represents a minimum set of standards. You can still articulate as a bank why you are compliant with your particular version of Islam. That is something that's like different there. Like whatever has the higher bar, obviously, you would be able to control it out there. They say, just preempting the stuff that they say about political control. Obviously, that's uncomparative. It's much harder to lobby a centralized body than to just get a random scholar to endorse whatever you want to do. I'll finally explain just. At the end of all of that, we also just reduce the bureaucracy. Because they just have a whole bunch of individual boards, which are, in their best case, very unpredictable, which creates more uncertainty for those banks. That's important because that layer of bureaucracy is stuff that can't be passed on to consumers in the form of lower interest rates, and that is something that's particularly harmful, so proud to OG.
Opening government seems to treat this as a debate about just like generic banking policy, about regulating banks, but that's not what this debate is about. It's about having a board that particularly enforces Sharia law, and whether or not that should be done at the banking level or at the state level and enforced under all banks. That's uniquely important here, because they hang their hat for this debate on just decreasing risk. And Sharia law is so good at decreasing risk, and then all of a sudden when we enforce Sharia law, we get a massively good banking sector. The problem here is, all the reasons why they describe decreasing risk as being super awesome and cool seem like things that would be equally true and the government would be willing to do it. So I'd wager to bet that if the government has yet to do it, it might not be as good as they describe. Because risk can do things like increase growth. You have banks that have more risk, that follow more, say, Western things and might not follow Sharia law as particularly well. You're more likely to get Western investment. You're more likely to have Western companies put their money into those banks, which increases your economy's overall stability because you have access to more and different financial markets.
Furthermore, it's just deeply unclear to me because this is entirely premised on the idea that they are the only ones to get Sharia law applied to the extent that they describe. We explain to you a set of ways and incentives as to why specific institutions and banks care deeply about complying with Sharia law, because their entire investment bank, the people that are investing in them and putting their money in them, do also care about Sharia law quite a lot. It is, in fact, their religion. And as such, they care about showing the fact that they're following these laws and actively following through on that. Because if they weren't, they would lose their main source of income. Now then, though, the next thing to say about investment and risk is that they don't actually explain why this is not able to happen. And the things they say, like, oh, they don't have regulatory bodies that are good enough and they're ineffective. Like, your thing is also run by the government, who is apparently ineffective in the ways you describe. Like, be real, be comparative. Furthermore, we flip this to explain the risk increase when you have more shadow banks, when you have people who are unwilling to invest in the existing banking infrastructure that is meaningfully regulated by secular regulation, because it applies to a different part of the religion, a religion that they don't believe in, because these banks follow and use uniquely different practices. This isn't just about setting minimums, it's about the active ways in which you go around Sharia law to engage and produce financial assets and instruments that are similar to Western ones. And when you are doing that, there are different ways in which you can do it. And one of those ways could be something that is uniquely allowed and the only way in which you can do it with Shia law, but the Sunni government says, no, you're not allowed to do that because that does not comply with our understanding of Sharia law. And at that point, you are blocked out of that financial instrument. You cannot own a home. You cannot own a car. Things like that are deeply important to people's lives. It meaningfully impacts people on the ground. And it's something this opposition government never seems to contend with, because they think that banking regulation is just setting some arbitrary minimum, and if you set it lower, and you can always go lower than that if you want. But that is not what this is about, because Sharia law is far more nuanced than willing to accept, because it is about how you get several different financial instruments and the ways in which you do so while complying with Sharia law, which is not just about setting a minimum. It is about doing things like whatever stocks about like ursaries or whatever they were. Now then, further on opening government, the next thing that they say is about information and efficiency and handling crises. Three things. The first thing is to say that you can't just plan ahead with these things. Like, obviously we might not be able to predict crises, but we know what crises look like. We know the ways in which they can occur. And as such, when you are looking at that, you can preemptively ask, like, these scholars, if this crisis would occur in this way, how would we respond in a way that does comply with Sharia law? Is this plan that we have compliant with Sharia law? And in the process of doing that, you go past the kind of inefficiencies that they talk about. But furthermore, I do think this bureaucracy also exists on their side. Because when you have your own independent board that does exist within in-house, when you as a bank face your own unique issue, you either go to them directly, they are not bogged up with other banks and their issues, and as such you're able to avoid the kind of inefficiencies that happen. You have extensive bureaucracies that have to deal with several banks who face several unique issues and face several, and are in unique contexts that deal with different individuals and different actors. I think issues of efficiency actually put to our side in this debate. The final thing though is to say these banks aren't actually that slow. I do just think it is unclear as to why it is so impossible to have your own scholar on call that you have on retainer, and you call them up and you say, is this plan that we have compliant with Sharia law? They can give you a yes or no answer within the day. I think that is meaningfully able to occur. Now then, in terms of investment and risk overall, two things here to say. The main thing is to say when they talk about people accessing due to this risk, they rely on a sort of sidestepping way, which is to say that they rely on people perceiving the risk that exists within these banks and then deciding not to engage with the banks because, they're too risky, a financial crisis could happen. First thing is to say that I don't think people meaningfully engage with banks in the ways they describe here. People aren't necessarily that financially savvy. Instead, I think what we are dealing here is significantly religious populations who really care far more deeply about their religion. They do things like the total risk within the market. Instead, I think religion is far more proximate to these people. And notice here, this is upstream of the things they said, because their impacts are about people engaging with these markets and there being too much risk and that hurting people. But we simply explain to you that when people have banks that do not follow their religious code, they do not engage in banks at all. And that is a far greater harm to these people. Now then that we've engaged them on their efficiency and their investment and risk, now let's talk about our stuff in terms of access. The first thing is to say, when they say that countries tend to be homogenous, this is just a flat-out lie. Syria has a government that is Sunni, but the majority of people within their country are Shia. Iraq has a government that is Shia, but the Kurds and Sunnis make up 2/3 of the population. These are people who are meaningfully blocked out of financial instruments that allow them to grow their wealth, allow them to hand wealth to their children that was more than they had when they died. This is something that we ought value in this debate. It's the ways that people get out of things like poverty. It is something that you ought care about. Furthermore, they said that government enforcing religion isn't new, but obviously within this debate, government enforcing religion on banking sectors and stopping people from accessing financial instruments is new, because that's what the topic does. The next thing is to say that this is about banks engaged with the less extreme risk and stuff already. Now then, further on access in terms of weighting this argument overall. First thing is to say that they just look for one scholar and say you're all good. The problem here is we engage in contact closing.
To a Western ear, does does not having a central regulatory policy sound particularly...
Now let's talk about access. A couple of things are related. Like, both this bench seems to think that this is about having any regulation at all in this government. You can have secular regulation. You can stop risk from being too high. You can set bars on how much risk you can have. This is about the unique ways in which you have financial instruments that go around Sharia law. That's what the info slide describes. Talking about access, I'm waiting. The first thing is to say this often uniquely impacts minority groups. It blocks a specific minority within a country from meaningfully accessing financial instruments and things like banks. Second is to say this is a massive impact. It's about people's access to wealth and development, to owning a home and things like that directly impacts people's lives. Now then, about the health of the banking sector. The thing to say here is we explain places largely good for stability within the banking sector. Things like having international banks, being interconnected between different countries. Furthermore, allowing international investment. Noting here, the government is unable to take this benefit because in terms of international investment, like this, if you have the central body allowing Western governments to not follow Sharia law, and like that undermines the trust in the central body, which impacts all that stuff about access. At the end of the day, I think it's quite conclusive that we clearly prove that people get far more access to banks, and the banking sector is far better on our side. For those reasons, proud to vote.
Gov member, whenever you're ready.
Oh wait, are you fine with?
You know what? Fine, yeah. Will can get performatively irate all he wants. Muslim majority countries in sub-Saharan Africa and Southeast Asia are, by and large, developing countries that are politically volatile and frequently in the position of asking external financiers like the IMF and like large governmental or corporate loaners to give them money to avoid things like recessions, to continue funding public programs. They will not provide that external finance those countries are in many cases reliant on if they cannot be confident that government can regulate the interest rates of all the banks that exist in that country, which in the LO setup is noted as a feature of Sharia law banking. They will not enter those countries and provide external finance. If they cannot guarantee that there are centrally enforced anti-terrorist and anti-money laundering provisions on those banks, which again is something that external financiers fear about banks that operate in the Islamic world, then they will not provide that external financing, which is the extension of CG, which provides big impact in this debate. Now let me get through the extension. The impetus and weighing for this, I think, have already provided. These are, by and large, countries that we're describing as Muslim majority countries, where there are plausible instances where they rely on external financing. Most of these countries, the vast majority of Muslim majority countries, are developing countries that have had political instability, have required external financing in the past. For example, the Asian financial crisis impacted much of Southeast Asia, which is a huge part of the Muslim world. The Arab Spring, which impacted the sub-Saharan African Muslim world very substantially and required external financing in many instances to get through crises that those things caused. Second, I would note that this extension is upstream of many of the concerns of this debate, because it explains that if you cannot get external financing for your country as a whole, then you cannot avoid things like recessions or cuts to public programs. That means that the vulnerable religious minorities who are already pretty oppressed in the Islamic world are the first to lose their jobs, are the first when those countries descend into crime, because that's what happens when recessions happen. Crime and terrorism go up quite substantially. Those are the first people to be targeted by those countries. Those are the first people to be hurt. So if that is something that we are able to avoid, then we're able to avoid all of those harms. We're also able to allow countries the ability to enforce regulations on countries when they have the money to do so, and to keep their banking sector afloat. That kind of thing sounds pretty good to me. I would suggest it's clearly the biggest impact in the debate. Why then is this a true extension? Three things to say here. The first is, one of the big features of Sharia banking that distinguishes it from conventional banking is that it prohibits usury, which is noted in LO setup. But I'll clarify that it means you cannot lend with interest, which means that much of Sharia banking is you're not like having an interest rate on that, but you have it in some other weird way by saying, well, if you get profit from the loan we've given, you have to give us a share of that profit, which guarantees that the bank gets something from doing the loan, similar to what an interest rate does, but they prohibit interest rates. And this is a big concern that external lenders have when they're considering prospectively lending to a country that has these banks predominant in a country, as the motion assumes they do. The first request of a loaner is that that country changes their monetary policy once they receive that loan, usually to hike interest rates so that the loans that are given out are safer, to reduce debt ratios in that country, to guarantee that country is able to pay back the money that's being loaned to them. External lenders perceive in the world of opposition bench the government has absolutely no power to control these kinds of practices. And in actuality, they don't. Because, again, you can just stipulate about the fact that there's external regulation. But when there's no central board that can say, for example, get around by saying you can only give loans to institutions that are going to be profitable, you can't alter, and there's no other means to alter things like interest rates or monetary policy that might impact whether or not you can pay that thing back, because every bank has an idiosyncratic fatwa, like approved policy that is different around something like interest rate, and that country cannot attract finance. Individual lenders feel free to use different practices, and that's disastrous. Those countries, first and foremost, just lose any interest from external financiers. And second, for better or for worse, people fear that Islamic banks launder money for violent anti-Western and terrorist institutions, and one of their preconditions of wanting to lend to those countries is the guarantee that all institutions in that country have some basic provisions against terrorism, some basic provisions against money laundering for organized crime. That is something that is promoted by racist sentiment, but also I would suggest a legitimate fear that institutions like Al-Shabaab, Boko Haram, Al-Qaeda operate in the kinds of countries that we're talking about. In their world, there are a series of banks with idiosyncratic rules about how they operate with regard to their transparency, with regard to the financial instruments that they offer, which means it's enormously difficult to know what organized crime is going to use. It's enormously difficult to know what terrorist groups are going to utilize. And it becomes far easier for terrorist groups to select the preferred boutique bank that offers whatever financial instrument that allows them to money launder the easiest. When there is a central institution that is enforced by the government, they're able to do things that assuage the concerns of those external financiers, like saying, no, there cannot be the set of instruments that promote money laundering, that make it more likely that that goes under the radar, that, for example, make that terrorist sentiment, those terrorists being able to lend. I'd also note, this generates an extraneous benefit, even if you don't believe the top-line impact of our extension, which is it makes it less likely that terrorist groups and organized crime can operate with compunction in these countries. Terrorist groups are bad, they lead to death, they often lead to quite a lot of political instability, and they lead to less investment in the country in general because it's perceived as unsafe to operate there. If we can cut terrorist groups at the knees, we think that's also an awesome thing.
When foreign investors want to engage with developing economic countries, they bank large financial institutions in Dubai, which we explain are able to exist uniquely under our side. Also, why wouldn't a terrorist group just go to a shadow bank?
Okay, but you're making it easier. They can use conventional financial instruments, which make it much easier to work. But also, I would suggest that, come on, sometimes they lend to a specific country, and these are regulations that exist on a country level. You are not going to get a lending in your country if you have that level of banking instability. I still think the exception to that. Thirdly, this creates an enormous risk of bank consolidation. Religious leaders can choose to endorse particularly favoured or rich banks and decline to support others, which leads to an attrition of banks that just aren't endorsed because of whatever, they would be paid off by a big bank. The competition in the big banking sector is an enormously good thing, and again, is favoured by Western financial institutions wishing to lend to that country, less expensive for consumers, low cost. Also, by the way, Dubai has these concerns as well. If there is instability on whether you get the loan back, that's a generic concern. It motivates financial instruments that are good. It motivates competition to create good financial instruments which suit the interests of various different corporate actors that operate in that country. When there are more banks, it becomes less likely that there are more banks. When each individual bank needs to be endorsed by a relatively small set of religious scholars. Once again, this is an extraneous benefit of our case. Competition in the banking sector is a good thing. It becomes less likely in a world in which individual religious scholars have a lot of power over which banks are able to be approved by the Sharia law. This extension is clearly the most important in the debate. It positions us way above the opening part. For that reason, CJ.
The most important thing in this debate is that in a time of crisis, Muslim countries in the Sahel, in the Middle East, and Southeast Asia have international support. Because what that international support enables is them to provide provide food to their populations, provide welfare to people who most need it and other state services, to build roads, for instance, to circumvent famine and epidemics, which are deadly and are by far the highest impact harm in this debate. And that did not happen when the IMF or other Western investment bodies believed that the banking systems which operated in these countries were particularly unreliable, were very foreign to them in how they worked, were very idiosyncratic from bank to bank, and the idea of the capacity to get return on the loans they gave out was just totally baffling to them because, obviously we have the benefit of an info slide, but the IMF does not when they look at these countries. So that is the largest harm by far in this debate, in terms of depth, in terms of scale, in terms of vulnerability of the people that it applies to. But we have two additional extraneous benefits, which is, firstly, beyond the fact that these countries are perceived to be working in cahoots with terrorist organizations or doing money laundering or other, unsavory practices, we think there is just more potential for that to happen under the opposition side of the House, which is obviously a harm in and of itself. It is bad that Boko Haram are able to gain more weapons for themselves. And secondly, we just point to the fact that this can lead to bank consolidation, because if you as an Islamic scholar can pick and choose which banks you think are most halal, that means that you can just pick and choose which banks succeed. And that is probably also a harm, and also a harm that the IMF is thinking about when they're looking at these countries. And this comes up over OO, because their claim is that, over OG, because their claim is that this is a better form of banking, and I think that that's vulnerable to the responses that we get from OO, which is to say that it may not necessarily be the best form of banking for the people on the ground in this context. But what we explain is that, irrespective of its reception on the ground, the bodies who are capable of remedying the worst possible harms that these countries could befall, like the IMF, perceive this as being particularly risky. They perceive centralised systems as being more accountable, and all of the things that Jenny explains in setup. What that meant was that these loans are far more accessible under our side of the debate than under OO's. The only responses that we get to our extension are from OO. The first thing they say, in a very impassioned rant from Will, is to say that, well, there is still central regulation. But firstly, noting the setup that they give is that, one of the main tenets of, one of the main differences between Islamic banking and, Western banking is how loans are recovered, because riba, or interest, is haram in Islam. And what that means is that there is great fluctuation under their side of the House as to how specific scholars circumvent this requirement, such that the way that banks recover loans is quite variable, and that so central regulation does not account for that. Secondly, even if it is true that central regulation is sufficient in order to make standardize this more, it's certainly perceived as less standard, given that banks are referring to theologians as opposed to financiers when it comes to the decisions that they are making. Therefore, our harm is still unlocked. The second response that we get in a POI, which is like a double-barrel one, is firstly to say that, well, FDI goes to Dubai, which can only exist in our world. Firstly, literally why? Obviously, Dubai could have banks that are centrally controlled. I think that is asserted. But secondly, I think it is far less likely that you get FDI in general, not just IMF investment, when the system of loan repayment is convoluted. I'm sure you'd be able to get symmetric levels of repayment, of investment in Dubai if their system was centralized. The other claim they make is that terrorists go to shadow banks. But I think firstly, obviously there is a minority of Islamic scholars who believe in terrorist ideologies. However, I think it's just more likely that you get some random person that you can get to rubber stamp a claim, or who thinks it is actually a legitimate exercise of Islam to invest in a particularly extremist group under their side of the House. But secondly, even if that's totally untrue, the perception that they could be in involvement with terrorists is what is worse. Let's now deal with CO's case. The first claim they make is that if interest rates are centrally controlled, loans are harder to acquire. Firstly, per OO's very clear characterization, there is still central control on things like interest rates. It's just things like how those interest rates are executed by banks. That is more variable. So I just don't understand how they are, what the difference is, what is not symmetric under their side of the House. But secondly, if you're getting a loan when you are unable to pay it back, or when the country is in a, when the country is unable to give out those loans, that's bad, right? Doesn't that just cause a recession? I know that much about finance, but if what they're saying is that you are setting policy which is better for people but worse for the government overall, that probably probably seems bad with rather centrally controlled government, controlled financial policy. And the second extension they make is that, like, well, inclusion of unbanked people in certain countries is harder. I think firstly this is derivative of OO, so the responses that I'm about to give to OO apply to them as well. But I will also note that, like, it's super unclear that individual banks can do microfinancing programs in the way that they suggest. That seems like something you need broader cooperation on. It's unclear that they get that. I'm going to move on to OO now, but before that I'll take a PLI from them.
How do you think the religious population will respond when the central body decides to not follow Sharia law to get less investment, both now and in the long term?
The religious population will have food to eat, will have a welfare program. I think they are not so devout that they are incapable of recognising that that is a good thing, a small short-term trade-off. Religious people aren't stupid. They also need to do things like drive on roads and eat food. So, what do OO claim? They make two claims. The first is that this impacts people's willingness to access banks. I think the first thing is they overestimate the differences within sectarian finance, because the ban on interest, which is, I think, the most influential part of the Quran, of Islam, on banking, is in the Quran as opposed to being any sort of like Caliph doctrine, which is where the main split between Shia and Sunni theology is. So I just don't think it's super true that these banks are going to be so radically different that people will refuse to set foot in the premises. But secondly, their largest harm, and taking them at their best, is that there are people who do not access these banks under our side. Firstly, there are clear countervailing incentives for you to access a bank. For instance, you can get access to a loan. So there are lots of people, I think, who are just more pragmatic than they suggest. Secondly, insofar as you are sceptical of banking, it's unclear this goes away now that they seem slightly more in line with your ideology, because they're still somewhat controlled by the central government, because you still fear that they will misplace your funds because you have a deep mistrust of the state. So the type of people we're talking about who are so sceptical of banking that they will only opt in if it is more in line with their religion, but not so sceptical that they would not opt in otherwise, is, I think, incredibly small. But I would additionally weigh that this, even if there is an unbanked population, it is better that they get access to food in a time of crisis than it is that they're banked. And their second claim is that having a diversity of banks is important for stability and attracting foreign investment. But I think, as I explained already, our extension flips this. We explain why the IMF and why FDI is much more likely to invest in these countries or to lend to these countries when they are more certain of them. At the end of the debate, what is most clear is that you get support when you most need it. Vote CG.
Upward.
And are you fine with the camera, Rob?
Let's start with the speech by trying to go through the extensions that come out from CG, the rest of the speech, and then integrated response to the rest of the debate walking our extension. I first want to start, I think, what is the weakest part of the CG extension, get it out of the debate, and that is the terror laws and funding crime and money laundering, etc. Because unfortunately for their side, there's no grey area in the banking rules of Sharia law that says maybe or maybe it's not permissible to fund terror organisations, maybe it's not permissible for money laundering, etc. As passionately explained by Will, as supported in a maybe less passionate sense by us. Those are obviously laws that are dictated by separate bodies to that. I think the unresponsiveness there from CG knocks an entire extension out of the debate. But I think the bigger problem for their side is that nothing about the central government control around the Islamic or religious doctrine of banks actually changes the perception issue they have around whether there's a fear or risk of terror or crime groups operating there. So this model approach doesn't even fix the optical issue that occurs on their side of the debate with regards to terror funding, which is unfortunate, obviously, but that is the reality of that extension. The second one to look at then is whether or not you get IMF loans or investment from foreign groups as a part of this. I think, I'm going to explain in a moment with our extension why it is less likely you even need this bailout in the first place, reduces the whole imperative for that part of their extension. The first you want to assume for a second is needed and then explain what it's supposed to do anyway. I think the first observation I make here is they actually massively increase the risk and all the consequences of harm of not getting that loan when you have one central authority that determines what is or isn't acceptable under the guy's Sharia law. Because, and this happened in Malaysia, I think it was under Anwar, or the Prime Minister before him, who rejected the IMF's structural adjustment program because it did not align with the centrally dictated version of what of banking and Sharia law finance. So that meant the whole country missed out on their side, which makes things far worse for them because it doesn't particularly align. And also, there's lots of incentives from voters to not want to kowtow to what the IMF or other system want to do because of how difficult that religious value is, because of how much distrust there is to Western institutions like the IMF and foreign loans, etc. Obviously, on the comparative, you have a diversity of approaches to Islamic banking, a diversity of banks that can be invested in. You have more capacity for foreign banks to come in and adjust their systems relative to the local area they are in and what perspective of Islam they're promoting, which means you're more likely to get more of that flexibility in, you're more likely to get access to more of those loans in times of crisis that exist. The next response I want to give actually starts bringing into the second issue of this debate, which is looking at why we decrease risk on our side. Because I think OG obviously explained that risk is important and risk is good. The whole debate agrees. We're going to move over the top half of this debate on risk and showing you why, structurally, the nature of Islamic banking and flexibility it provides, by having different individual systems, massively reduces risk in a way that beats the top half overall. So, importantly here, let's start with what we tell you in extension. We tell you that interest rates are under the Sharia law and you can't do high interest rates cause harm to the borrower, and that is the central principle that wants to be avoided here. And that's why you require a parallel system to the West. That means, importantly, that Islamic banking systems are hit significantly less by global financial crises and other economic downturns because they're not reliant on significant debt financing and all the other made-up imaginary economic terms that are invented in the GFC to make people more money. So that means we're actually better because it is a part of Islamic law. And importantly here, if you have a central bank that's maybe more in line with those interest rates, that creates a higher risk to the whole country. But when you allow individual banks to approach it in their own structure, more banks are more secure and safe from that risk of those shocks happening and more protected from the consequences of that. I think secondly, we tell you obviously that it worsens the cost of borrowing, so people can't have homes, can't get access to education, etc. And that is significantly worse for those individuals in terms of their quality of life, etc. And when you raise high interest rates to match what the government wants to do to appease the IMF, make all those quality of life individuals worse. I think that's important differentiation from our opening too, because we actually attach the harm of people losing access to the harm to the financial instruments that the bank wants to use on their side. I think the third thing we tell you is because it is also significantly riskier if your central government is controlling it, because those are the ones that are most susceptible to political interference, because those are the ones that are most susceptible to voter incentives, etc. That mean that governments can change on a whim, depending on who gets elected or who gets rolled or who gets changed. As an example with the Malaysian political situation, it actually becomes more risky to put all your eggs in one basket and invest in a government that could change and politically interfering with the vision of Islam going forward. There's no way all of that against CG, which I guess is the long foreshadowed response I've been talking about here. Is the debate occurs where some financial stability has to exist, right? Because CG is contingent upon a crisis hitting hard. We prove that we explain the extension of Joel explicitly why the structures of the different individual systems of Islamic banking allow to massively reduce the risk of that crisis hitting and occurring in the first place then, which means they're essentially just, to quote Austin, we're more upstream of them at this point now. The benefit then of towing the line to the IMF, the structural adjustment program, is not as certain as ours, and we help prevent more people from self-selecting out of economic participation, which is what I'll cover in a second. I will take that paper for that.
There's still a degree of diversity in practices on our side. The difference is they just all operate above our central minimum standards, which decreases financial risk for our writ large.
Yeah, but I think you should have a base standard your base level of standards, etc. But the problem is then that one, you're still susceptible to things go wrong. But two, as I'm about to cover, lots of people don't agree with that system of standard banking because you get less people in because they're more susceptible to that risk. They have no capacity for economic growth. But also, if anything random happens, like the house burns down or whatever, they lose all access to that capital. They're not putting it in banks, and that's the bigger harm that you guys encourage on your side by not allowing those people to access banking. So let's talk about financial inclusion as the last part of the speech here. Because I think OO does identify this, but they're a bit surface level in explaining why. Because all they just say, well, it's your religion, so you won't engage in it, therefore you won't engage in it, that's bad. Joel does a number of things in their extension to explain why we get the issue here. The first thing here we do here is is we actually place it just to the relevant parts of the world where this debate is actually occurring and detail why in these countries this issue is occurring and why it's important. Secondly, we discuss the actual problem here is the systems in countries have different population sectors and different desires around religiosity, etc. But thirdly, we actually explain why the board can't be one that is like multi-sectarian and can't reach consensus on any of this because of the wildly different views and why you can't actually reach a consensus between technocrats, the Sharia law, and the Sunni law approaches to that, which means the board can't function, has to pick an outcome that is actually proving the harm they talk about. Fourthly, we provide the actual harm here, microfinancing on the ground. It means that people can't give up minor loans to start business. It means people can't give up minor loans to start economic growth or to get people in the bank system in the first place here. And that was all particularly important. Why was all of Joel's contribution more important on this then? It was more important to identify some of the most vulnerable people, the rural people, poor people, non-banking people, but also the people we targeted and felt had the biggest change in how their lives improved, having access to the system that works in their way, otherwise it wouldn't occur. So the amount of change here is significantly increased on our side as well. I think at the end of this speech, it's particularly clear that what CO provides you today is firstly the most structural way in which these systems of flexibility allows you to decrease risk, which answers the question of the rest of the debate, and we explain more specifically why we benefit people we care about, which also has the most vulnerable stakeholder in the debate, and that is why CO should go.